Welcome to TFE Talks, Navigating Wealth, Business, and Legacy, the podcast from Thomas Fisher and Edwards. Each episode, our attorneys bring you expert insight on estate planning, business strategy, and legacy building, breaking down complex topics into clear, actionable advice. Whether you're solidifying a strategy we've discussed or preparing for what's next, this podcast is your resource for thoughtful, practical planning. You ready? Let's dive in.
Hello and welcome to another edition of TFE Talks. I'm your host, Jordan Goewey, and I'm joined by another attorney here at Thomas Fisher and Edwards in Greenville, South Carolina, Parker Baker. Parker, nice to have you today.
Yeah, thanks for having me on the podcast this morning.
Yeah, so Parker, this is the first time that I've had one of the attorneys at the firm that's younger than me on the podcast. And so just a brief background for you. You went to Vanderbilt University for your undergrad, which is obviously a great institution. And then you went to the University of South Carolina for your law degree, and then to the University of Florida for your LLM in taxation. And then you joined the firm, I think, a little over 2 years ago, and we've been happy to have you ever since.
Yeah, that's right. I'm from Anderson, so I'm originally from the upstate here, and been back for about 2 years. Been enjoying working at the firm.
Yeah. And like all of our attorneys, you practice in both estate planning and in business advising. And today we're actually going to focus on a business advising topic. And this is something that you and I have dealt with on a number of matters in the past, because we've worked on a few M&A transactions together with business sales. And so we're going to talk today about corporate cleanups in the business sale context. And I say corporate cleanups, but really I just mean the idea of cleaning up any sort of entity, whether it's a corporation or an LLC. And so when we talk about a corporate cleanup, what are we really talking about in that business sale context?
Yeah, so a corporate cleanup is ideally something that happens before you get into the sale process. But as we'll get into later, sometimes we have to do it during the sale process. But it's essentially this idea that we're going to make sure that all of the underlying documentation, all of the paperwork with respect to the entity, sort of the foundational documents of the entity, any agreements that it has with outside parties, any tax records, all the records relating to the business are correct. They're accurate. The business has been following all of the relevant rules and regulations, and that those documents reflect the reality of the business as the business owners see it.
And so, Parker, why does that end up being important when a seller decides to sell their business? If I've owned a business for years and I've operated it and I've done a great job running things and we've been very successful and made a lot of money, then I decide to sell it. Why does it matter that all these records are correct and tidied up?
Yeah, and I'll say there's probably two reasons. First is that at some point they do need to be correct. Someone's not going to buy your business without real proof that you're the proper owner of the business and that you have complied with any rules and regulations that you need to, so that they're not stepping into any liabilities that they don't wish to carry on. The second is sort of this idea that it's very similar if you were to sell your home, right? If you were going to sell your home, you'd likely want to stage it. You put some nice furniture in there. You wouldn't just leave it all dusty for the buyer to walk in and say, oh, hey, maybe they didn't treat the home as well. There might be more scrutiny that they might have, when they're hiring an appraiser to look at it or what have you. And I think the same applies in the business sale context. So to the extent that you have these records, they are accurate and they are well organized and they're clear, I think it makes a buyer feel better about buying your business, and it makes your business look better.
And so, Parker, I think it would probably help if we kind of had some examples to go off of. So are there any, in just kind of general terms, are there any common issues that you have seen in your practice thus far?
Yeah, I would say that one of the issues that you run into is with the documents that indicate who owns the entity. I think is a really good example. Functionally, like you said, they've been running the business, that things have been going fine, right? They're contracting with outside individuals, vendors, and customers, and they're not having issues because those people aren't asking for those underlying ownership documents. But when they get into the business sale context, they realize that, perhaps when they set up the entity and they did those initial documents, they didn't do them correctly. And what is reflected as the ownership is not really how the business owners understand it. So an example of this might be something like, you have the documents that create the entity with the Secretary of State, and they say that there's a certain number of shares outstanding. So say that it says that there's 50 shares that are outstanding. And then you have the stock certificates, which indicate how many shares a particular person owns. And it says that this one person is a sole shareholder and they own 100 shares, right? And so that's not really possible, obviously, because that's more shares owned by someone than are outstanding. And that's something that you can clean up fairly easily, but that doesn't really indicate the true reality of the business. So if you were to try to go out and sell the shares of the business, the buyer would say, well, you don't really have 100 shares to sell me. What's going on? We'll need to look closer into this. You may also see that somebody else may say they own a portion of the business, right? But there's no documentation to reflect that, there's no, for a corporation, there's no stock certificate that says that they own, however many number of shares that would indicate that they are indeed also a business owner who would be entitled to payment upon the sale of the business.
And Parker, you touched on it a little bit earlier, but I think keeping in mind how is a buyer going to look at that is important because, again, even if it's a really minor thing and you're the only shareholder, if the share certificate says one thing and the corporate record says something else, then that buyer is going to say, well, I don't know. Is there some other shareholder that's going to come out of the woodwork in 5 years and say, actually, they own those other 50 shares or something like that? And so you don't want to plant those seeds of doubt in a buyer's mind. Another thing that I think that would be helpful for our listeners is very briefly touching on what basic documents do most entities have. And I suppose it depends on the type of entity. So let's focus on probably the two most common, which would be a corporation or an LLC. With those two separate entities, what documents should all corporations have and what documents should all LLCs have?
Yeah, so I'll start with the corporation. With a corporation, you would need first articles of incorporation, which are the document that create the entity with the state. You would also need bylaws, and those are the document that governs sort of the operation of the management of the business on that. You also need stock certificates, which are documents that indicate who owns particular ownership interests in that corporation. Ideally, you would also have a stock ledger that indicates in the past who owns some of the shares, how people moved in and out of the entity. There should be meeting minutes as well. Corporations, it's very important that they follow the corporate formalities and that they have these meetings to really indicate that this is a real entity and it's not just the people who own it acting on their own, that this is a separate entity and it's real and it has meetings. And so there should be meeting minutes to indicate corporate actions that were taken in the past as well. For an LLC, it's a little bit simpler, but you do still need some different documents. Articles of organization, similar to those articles of incorporation, that's the document that's going to create the entity with the state. An operating agreement is the document that governs the interactions among the members and potentially managers of that LLC. And ideally, you would also have some sort of ownership record as well. It's not required to have certificates as it would be with the corporate form, but some folks will do that with an LLC. But at the bare minimum, some record of who owns what in that.
And I'll note that's very important to me because I see all the time clients come in with LLCs and they've filled out the documents on their own for the Secretary of State and they've listed themselves as the organizer and as the registered agent. But a lot of times they've never actually listed themselves as the owner, which is the member in the LLC context. They've never actually done that anywhere. So there's not actual evidence that they own the company because it's not really in the filings with the state, which has always been a bit of a frustration in my mind, but sometimes clients are shocked to discover that.
Yeah, I've definitely seen that as well.
And so we've talked a lot about kind of just the legal business organization cleanup stuff. What are some other kind of proactive things that a corporation needs to do or an LLC needs to do when they're thinking about potentially selling at some point in the future? What are some other things that we can clean up to make a business ready to go to market?
Yeah, and so two things. One thing I would say is there may be some cleanup that you might want to approach other professionals to help you with. And I think the most prevalent of that would likely be tax, just to either have your accountant or maybe bring in another accountant just to make sure that all the tax filings that needed to be filed were made with the state and the federal level. And this is especially important if you have something like an S corporation, where the rules are very stringent and, little mistakes that you make can blow that S election and can really scare a buyer because there can be big tax liability associated with that. And so in that context, it can be helpful to bring some of those folks in to do a little bit of corporate cleanup in their own way. And then the second thing that I would say is to sort of lock down the attributes of your business that the buyer would be interested in. So this might be, for instance, key employees. You have some employees that are integral to the business. Like the business isn't worth anything without this employee. They're very good and they bring the business a lot of revenue. You're going to want to lock that employee in to the business with an employment agreement, potentially have some restrictive covenants. So, the buyer doesn't buy it and that employee runs out and starts competing with the business. And then the other thing would be, if you have any intellectual property, you're going to want that codified. You're going to want that indicated that the business owns that. Additionally, on that, you're going to want to make sure that you have some sort of agreements in place that indicate you have agreements with the vendors that you regularly work with and the major customers of your entity. Even if it's always been done on a friendly basis and these guys, them really well, the buyer may not. And that may be a huge portion of your business is these relationships that you've built with these different groups. And so reducing those agreements to writing and having contracts that can indicate that you can give that value to someone else when you sell the business can be very valuable as well.
Yeah, and I think that's a really good point, Parker. And, we see it a lot in our practice because we live in Greenville, and Greenville's grown a lot. South Carolina has grown a lot. But I think that there are still a lot of closely held businesses here that still operate on kind of like a small town basis where there's a lot of handshake agreements with vendors and suppliers, and everything works fine with all of that on a day-to-day basis. But when you're looking to potentially sell to a third party, having actual things in writing that you can show to a third party and say, this is how stuff works, this is how I run it, that can be very helpful. And so I guess one thing that a business owner could be tempted to do is just say, you know what, this is great advice that Parker's giving today, but I can just wait and sort all this out when I get ready to sell the business in a few years. Why is it important that we go ahead and consider these things now, potentially years in advance of a potential business sale, rather than waiting?
I think there's really two reasons. One is that it gives you the time to do it without needing to do it on a time crunch, which ultimately is going to end up more expensive for you. And if you don't clean up that business, like we said, that's not as attractive to the buyer. Maybe that makes the buyer less interested in certain aspects of your business, maybe gives you less negotiating leverage that could indicate or that could affect what that ultimate sales price on the business looks for. The other thing is, maybe you don't think that it's going to be 3 years till you sell the business. But, life can happen and there can be a reason that the business needs to be sold earlier. Something happens to you. Maybe you decide that you want to get out for another reason, for a more personal life reason. And if you go ahead and you go through that process and you have the business ready and, say a buyer shows up with a really good offer, then you're in a position to take advantage of that at that point in time. And you don't need to do this legwork because you've already completed it.
Yeah, and one additional thing I'll note is we sometimes use the phrase old and cold. We like for any issues to be settled and for them to be old and cold. If you did find an issue with your tax reporting or something and you fix it this year, I'd like for you to go ahead and file a couple of, additional tax returns over the next couple of years where everything's been fixed and everything is being reported correctly so that by the time a buyer does come along, the issue's old and cold. We not only did we solve it, but we've been reporting it correctly for a few years when the sale finally comes around. But yeah, that's a really good summary of the reasons for why we want to start now. And so, Parker, a primary goal of this podcast is to give individuals practical advice on planning topics. And so what is one practical step that a business owner could take today to set themselves up in the future for a potential business sale?
Yeah, so I think the bare minimum, sort of the easiest step is to make sure that you have all of the necessary governing documents for whatever your business is, whether that be your corporation or your LLC, that you have all those documents that we discussed and that they seem to indicate the actual ownership of your business is correct and that you also have been taking those minutes in the past. And if you haven't, to start doing that. And if it's in a place where you're looking and you're not really sure, that may be valuable to go and get some help with, reach out to an attorney on that to help you work through and see if you can at least take those foundational, those initial steps to getting that business cleaned up. Yeah,
I agree completely. That's certainly the first step in most scenarios. Parker, I thought this was a really great summary of corporate cleanups in the business sale context. Thanks for joining me today, and I look forward to having you on future podcasts.
Yeah, looking forward to it as well. So thanks for having me.
Thanks for listening to TFE Talks. For more information, please visit our website at www.tfelawfirm.com. You can also follow us on LinkedIn, Facebook, and Instagram by clicking the links below in the show notes. If you have any questions about topics discussed in the episode, or you have recommendations for future topics, please email us at info@tfelawfirm.com. See you next time.